on a traditional IRA. So say you have 10 grand in an IRA here, traditional, 10 grand in a Roth. Okay. 10 grands. And you want to put money from this traditional IRA into the Roth. It's called a conversion. So you would take, say, $5,000 from the traditional IRA, pay the tax on it, and convert it to a Roth. Now you got 15 grand in Roth IRAs, 5 in traditional.
All right.
Okay. Why would you want to do that?
I'm assuming because you might be in a, like right now, historic low tax.
Bingo.
Welcome to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Anchored in family values, Wayne offers practical advice to help you get the most out of your retirement years. For more information, visit today'sretirees.com. Now, here's your host.
And welcome to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. We're glad you are with us today. Today we're going to talk about one of our favorite subjects that everybody in America loves to talk about. Taxes.
Yeah.
Don't we love taxes?
You know, I don't know. I love trying to help people to pay less taxes, but yeah, we hate paying them. We don't want to pay more than we have to.
Well, every administration, we're under a new administration now. Every time the administration changes, the tax plans change.
Mm-hmm.
I've said this on the show before. Why don't we just go with a flat tax and everybody knows where we stand?
Yeah, it would be great.
But
but the people that have, and this really isn't what I want to talk about, but
I got him off on that.
But like now you hear they're talking about tax the rich. The rich figure out ways to they're not going to pay more tax.
Mm-hmm.
They're not rich by accident.
Right.
So they'll figure out, they have the best accountants and best tax attorneys, and they'll figure out ways to pay less taxes.
Sure. Through
buying more things, investing in things, deductions, whatever it is.
Right.
They'll figure out the way. So I just think a lot of those people they don't want a flat tax because then they are going to pay tax, based on their consumption.
Well, it could be.
You know what I mean? So I'm thinking the people that we think are really getting hammered with high taxes, tax the rich, they're going to end up paying more tax with a flat tax, and I think that's why it's not happening.
Sure.
If you and I, we want a flat tax,
Right.
So that makes sense. It'd be simple tax returns.
It would be simple for accountant planning. And,
Their accountants would go out of bubusiness, right?
Yeah. Well,
we wouldn't need them. So they're probably lobbying against a flat tax. Who knows?
Sure.
But, we're wrapping up tax season here, and it's either behind us now or soon will be, depending on when this show airs.
Right.
And it's a good time to talk about taxes.
Sure.
For next year.
Right, and that's one of the things that you have always said in these shows through the years is tax planning. None of us are against paying our taxes. We know we have to have sewers and water and roads and all of military. We know we have to have that, and somebody has to pay for it. It's called the American people, so we're not against that. But what you do and what you have said through the years, if I can put words in your mouth, is you want to make sure that you are not overpaying and that you take advantage of what you can take advantage of.
Kind of. Yeah, if the client is of that mindset. Mm-hmm. I mean, there's some people that
don't care.
They don't care.
Okay.
They're just gonna whatever. If somebody wants to pull 40 grand out of an IRA to buy a car or do a room addition or whatever, remodeling or whatever, I want to know how it's going to affect that client tax-wise. Is it going to bump them from the 12% bracket to the 22%? Is it going to cause more of their Social Security to be taxed? The answer is yes, but unless they're maxing out that already. The max is you're going to pay 85% tax. 85% of your Social Security will be included in taxable income.
Okay.
So, if you have $10,000 in Social Security income, the most that could be included is $8,500. So if you're already there, any additional IRA withdrawals isn't going to bump that up. You're already maxing out.
Okay.
Right? But if you have $10,000 Social Security income and you're paying tax on $2,000, and you make a withdrawal from an IRA, and now it causes you to go to that $8,500, that's $6,500 more in income you had just because you made that IRA withdrawal.
Okay.
See what I'm saying?
Sure.
It's a little complicated, but I want to know that.
Right.
I want to know if we bump a tax bracket. I want to know if we're going to pay more tax on our Social Security, and I want to know if it's going to cause your Medicare premiums to go up. It's based on income now.
Okay.
If you get to a certain level of income, you're going to pay more for your Medicare premiums, right? It's kind of a means testing. So I'd want to know that. Some people, like we mentioned earlier, don't care. They're just going to pull the $40,000 out.
Right.
So I do suggest if we're doing the client's taxes in our tax program, we have the accountant do a projection. Hey, client, Mr. Jones wants to pull $40,000. We're thinking of doing it from the IRA. Right, but we have other sources, so we could pull it elsewhere. If we pull it from the IRA, what's it look like?
Okay.
And then we see. Or what if we pull half from the IRA and the other half from over here?
Sure. Okay.
And we get the number before we make the withdrawal. And then we can make an educated decision. By the way, I pay for that for my clients. It doesn't cost my client anything.
Okay.
I mean, what a deal, right?
Yes,
But
absolutely.
you need to know this stuff. I pay the accountant for those projections. If you're not part of our tax service or discounted tax service, that's the $90, right, that we always talk about. So you have your own CPA. I would tell my client, go to your CPA. They did your taxes last year. Tell them you're thinking of pulling, X amount from your IRA. What's it going to do to your taxes?
Sure.
Before we do it.
Right.
It just, to me, it's common sense. It's a little extra work. It takes a little more time. Right? If you're ready to buy something right now and you got to wait on your accountant now to run the numbers and talk to me and then figure out how to pull it, But if you're going to pay more tax if you don't do all that,
right?
It does. I'd rather try and pay less tax.
Well, to me, it just and again, this my brain having. The scripture says, in the multitude of counselors, there's safety.
Yeah.
And you got you involved, you got the CPA involved, maybe somebody else involved,
Sometimes tax attorneys or, with other aspects of life,
Sure.
not taxes, attorneys involved or, you just have to think through these things, work with professionals because they're going to tell you things that you wouldn't have thought about.
Sure.
And that's the whole.
Because they do this every day.
That's why we're worth what we get paid.
Right. You do it every day. I do it
every day. The accountant does it every day.
Right.
It just talk to the professionals that are very familiar with what's going on. You'll pay less tax in the end. Period.
Right. Well, friends, today we're talking about taxes. We're going to take a little break. When we come back, we're going to be talking a little bit more about taxes and when to pay and Roth.
When to pay, that's a big one.
When to pay, yes. I didn't even know that was a question until he said. I thought it was April 15th when you pay.
Nope.
But we'll be back to talk about that in just a moment.
So we've all heard the word rollover when referring to an investment account at work or your 401k, your 403b, your 457 plan. What do you do with that when you've left your job and your 401k or other retirement plan is still at your old employer? Or what if you've retired? One thing you don't want to do is you don't want to leave your money, your retirement account, in your employer's 401k. Quite frankly, your old employer or current employer is the boss of your retirement account. So if you have questions about what to do with your rollover, you roll it to Wayne. Get it in your own hands where you have the whole universe of investments and choices, not just what your employer tells you can pick from. So contact my office for a free consultation on how to roll over your old retirement account. A certified financial planner is a true professional, a well-rounded, holistic planner that helps you in all areas of your financial life. Estate planning, tax planning, financial planning, insurance planning. We have to sit for a 10-hour, 2-day exam, at least back when I took the test. It's not just a weekend designation where you go somewhere for a couple days, pay a couple $100 and now you have letters behind your name. One thing I think is important is that you try and find a independent certified financial planner. Somebody that doesn't work for a big firm. I myself own my company, Great Lakes Benefits and Wealth Management. The buck stops with me, an independent certified financial planner, one of the only ones on the north coast of Ohio.
And welcome back to today's Retirees with certified financial planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. We're talking about taxes today, and as we left our previous segment, Wayne was starting to tell us that there's other times. I mean, the question is when to pay your taxes, and I just assumed that most of us have to have it paid by April 15, or you know, those that are retired, you know, it might be a little bit different on how you figure that out, but that's not the case?
Well, not in the tax I'm talking about.
Okay.
And it's a very common tax, and you're probably very familiar with it. So we'll use an example of your IRA contributions. You know, why do you put money into an IRA? Typically.
Well, you tip it for retirement later.
Right.
That's not the. See, he looks at me like this, and I think, did I say something wrong?
Why not just put it in the bank or in a regular mutual fund? Why put it in the IRA?
Well, the IRA, that's a good. Well, I don't know Well, I'm thinking of the Roth IRA.
This could apply to that too. So,
okay.
and that's kind of where I'm getting at. If you're going to do an IRA, you could choose to do a Roth, or you could do a regular IRA.
Okay.
But most people put money in an IRA to save on tax.
Sure. Today, but you don't, on the Roth, you don't save today, do you?
No.
Because that's after tax income.
Yeah, so if you do, let's just say we have Roth as one option and an IRA as another option.
Okay.
Okay, and your accountant says, Rich, you could put up to $7,000 this year in either a Roth or either an IRA. Okay, you say, okay, what should you do? The accountant says, well, you know, you're roughly in a 20% bracket. If you put money in a Roth, you're going to pay 20% more on the $7,000. If you put money in a traditional IRA, you're going to save 20% of $1,400 of less tax.
Okay.
Okay, so you're not going to pay the tax on that IRA today. You're going to pay sometime in the future. With the Roth, you're choosing to pay it today because you're not going to get the tax deduction for the Roth. But then that $7,000 grows in that Roth tax-free for the rest of your life. Whenever you pull the money out, it's not taxed. So say that $7,000 grows to $50,000. You could cash in the whole Roth and pay no tax on the $50,000.
Aha. Okay.
The regular IRA, you got the tax deduction today. So you save $1,400 in tax.
Okay.
But when that $7,000 grows to $50,000 and you pull it out, now you're paying tax on the $50,000.
Aha.
Versus the tax-free $50,000 on the Roth.
Okay.
So what's better?
I guess that depends on your situation.
Depends on the person.
Right.
That's called, do you want to pay the tax now, the Roth, versus pay the tax later, the traditional IRA. Same with traditional 401ks or Roth 401ks.
Okay. All right.
So this is a time to think about that with administration changes. You know, we have a new president, a new, you know, Democrat-controlled House, Senate, and president, you know. So they've said taxes are going to go up. They've said they have been talking about repealing the Trump tax cuts. So if you think taxes are going to go up, what should you be doing now, tax-wise?
Sure.
And I'm asking you that question.
You're yes. So he really is putting me on.
Yes.
Let me just answer that question.
Yes.
I would go back to what we talked about in a previous show, and I would talk to my tax attorney, or not my CPA and my financial advisor, and say what is best, what makes more sense here at my age and my income.
So, and what they're going to say, they're going to say, well, Rich, what do you think taxes are going to be like in the future versus today?
Most likely, they are going to be higher, at least in the near term.
Okay. So if that's the case, then somebody that believes like you should not be putting money in traditional IRAs or 401ks.
Okay.
Because you're not going to pay the tax this year. So if we're at historically low rates right now, why would I want to put money in an IRA or 401k and get the tax deduction? Because I know taxes are going to be higher in the future when I eventually pull the money out of the IRA.
Sure.
So why would I want to do that versus wouldn't I want to pay the tax today, historically low rates, put the money in a Roth or Roth 401k, and then pull it out in the future when tax rates are high, tax-free.
There you go.
Right? Problem is, it's hard to do. When the accountant says, hey, you put 20 grand in your 401k last year at 20% tax bracket, you saved $4,000. If you'd have put that in a Roth 401k, you'd owe $4 grand more this year. Right?
Sure.
Hard to do. I agree with you, though. I think it's the right thing to do. But it's hard to do when you get immediate tax deductions in traditional 401ks and traditional IRAs.
Sure.
Just pay the tax now at lower rates, Roth, versus get a tax deduction now at lower rates, traditional, and then pay the high rates on a larger amount of money at some point in the future.
Well,
doesn't make sense, but that's what most people do.
Right. Well, it's what you have said through the years. Do you want to pay the tax on the seed
versus the crop?
Versus the crop, because the crop is generally a lot larger.
Yeah, because you're not gonna pull the money out of your 401k or IRAs till decades down the road.
Sure.
Most likely. And that dollar you put in is going to be worth more than $1, most likely.
Now, would that same scenario hold true if, say, you weren't, you are, say, in your upper 70s or 80s, in that is something like that
Different
as well?
story. So we'll talk about that next segment.
Okay.
So yeah, once you get to that age, you can't put money in the IRAs anyway.
Okay.
So
and
you got to have earned income.
That's
to
all
do that.
prior to what, like 70
This is just for people saving for retirement.
Sure.
General thoughts. People 20s, 30s, 40s, 50s saving for retirement.
There you go.
You want to pay the tax now or do it later.
Right. Take the advice, friends. Trust me, you won't regret it. Go to Wayne's website, todaysretirees.com, todaysretirees.com, or pick up the phone at 866-626-3990.
A certified financial planner is a true professional, a well-rounded, holistic planner that helps you in all areas of your financial life. Estate planning, tax planning, financial planning, insurance planning. We have to sit for a 10-hour, 2-day exam, at least back when I took the test. It's not just a weekend designation where you go somewhere for a couple days, pay a couple $100, and now you have letters behind your name. One thing I think is important is that you try and find a independent certified financial planner. Somebody that doesn't work for a big firm. I myself own my company, Great Lakes Benefits and Wealth Management. The buck stops with me, an independent, certified financial planner, one of the only ones on the north coast of Ohio. So we've all heard the word rollover when referring to an investment account at work or your 401k, your 403b, your 457 plan. What do you do with that when you've left your job and your 401k or other retirement plan is still at your old employer? Or what if you've retired? And one thing you don't want to do is you don't want to leave your money, your retirement account, in your employer's 401k. Quite frankly, your old employer or current employer is the boss of your retirement account. So if you have questions about what to do with your rollover, you roll it to Wayne. Get it in your own hands where you have the whole universe of investments and choices, not just what your employer tells you can pick from. So contact my office for a free consultation on how to roll over your old retirement account.
And welcome back to Today's Retirees with certified financial planner Wayne Maslyk of Great Lakes Benefits and wealth management. Today we're talking about taxes, and the first couple of segments we talked about when you can pay your taxes, and a little bit about how that deals with IRAs and other
when
things.
you should pay your
Or
tax.
when you should, yes.
Right.
Yes, that's right. So let's talk a little bit about Roth conversions.
Mm-hmm.
And how does that affect your tax? Because I'm assuming that when you say a Roth conversion, is that when you start drawing it out?
No. So, and this is another big thing that's overlooked, especially with CPAs that aren't proactive or
Okay.
financial advisors. And we talked about when should you pay your tax in the last couple of segments. That's like, should you put money in a traditional IRA now, get the tax deduction, right, and then pay a higher tax most likely in the future, or do a traditional Roth IRA or 401k now.
Sure.
Pay the tax now. You're choosing to pay the tax, not get the tax deduction, knowing that you have tax-free growth for the rest of your life.
Sure.
So it's a hard decision to make, giving up the tax deduction of the traditional IRAs and 401ks. You're going to pay more tax, but in the future, you'll pay less tax.
Right. Okay.
Traditional versus Roth. So if you when you do a Roth conversion, what you're doing is you're choosing to pay tax on a traditional IRA. So say you have 10 grand in an IRA here, traditional, 10 grand in a Roth.
Okay.
Two 10 grands. And you want to put money from this traditional IRA into the Roth. Okay, that's called a conversion. So you would take, say, $5,000 from the traditional IRA, pay the tax on it, and convert it to a Roth. Okay. Now you got 15 grand in Roth IRAs, 5 in traditional.
All right.
Okay. Why would you want to do that?
I'm assuming because you might be in like right now, historic low tax.
Bingo. So, most people are in a 12% tax bracket or lower. So you could convert $12,000 or $10,000 of a traditional IRA, put it to Roth, pay $1,200 on the 10 grand, right? 12%.
Sure.
If rates go up to say 20%, right? Whenever you pull money out of that traditional IRA because you didn't do the Roth conversion, say you didn't do it, you're going to pay 20% on your withdrawals versus getting it out of the way now, taking the 12% hit. Now it's tax-free forever.
Right.
So if you, like we talked in earlier segments, if you feel taxes are going to go up in the future, you may want to consider doing some Roth conversions now. And this is for people, like you said at the end of the last segment, in their 70s,
Okay.
60s, 80s, whatever it is. If you think taxes are going up, you may want to say, hey, let me take my tax hit now.
Okay.
I'll just convert whatever, and I'll get it to the Roth IRA. And some people are okay with say, paying a certain bracket. Say you're in a 12% bracket, right? So, okay, I'm willing to pay 12%.
Okay.
So here's a proactive again. You have your accountant say, okay, this is how much IRA you could convert to a Roth and still be in a 12% bracket, right? Say it's $30,000.
Okay.
Right? Once you over 30, you're going to be in a 22% bracket, so we don't want to do that. So this person will convert 30,000 because they're willing to pay the 12 this year. Move it from a traditional to a Roth. So it's the same thing. Pay now or pay later. You're choosing when to pay the tax on those IRAs.
Sure.
Just like when you're going to contribute to an IRA or a 401k, do you want to pay the tax now, i.e. get the tax deduction, or i.e. do the Roth, not get the tax deduction, versus I'm going to put the tax liability off till down the road. I'm going to take my tax deduction this year.
Sure.
It's a choice.
Right.
It's a choice with the contributions. It's a choice with these Roth conversions.
Sure. Now, does that still hold true if you have like a 401? Because those are a little bit different, right?
It can. I mean, you could contribute to 401ks and IRAs and do Roth conversions in addition.
Oh.
Right? Some people scramble. Hey, taxes are going up. I want to get all my taxes paid on these.
Okay.
So yeah, now there are certain income limits to Roth conversions. If you get into the hundreds of thousands of income, the government limits the Roth conversions you can do. Most people can do as much as they want, the tax they're willing to pay on that.
Right. Now, is there a season? I mean, I know.
Nope.
So I can do it in May.
Calendar year. Yep. For that year. It's
or October.
Calendar year.
Okay.
Yep. All year long, it'd be in that tax year. And you could reverse it. Like, say you could converted and the market was high or whatever, and now the market dropped a lot. You could reverse the Roth conversion and then do it again at the new lower stock prices. We're out of time now, but that's probably another show. But yeah, a lot of options with Roth conversions. So if you get the mindset you want to get your taxes paid now, talk to your advisor, talk to your CPA, and they'll work a plan for you.
Well, and that's the key is the plan. Working with someone like yourself to put a plan together that makes sense for your family.
Yeah. Once you know you want to do that, once you have it in your mind, hey, let me get my taxes paid. I'll pay the 12% because I know they're going up.
Right.
That's when the work starts to be begun.
Sure. Well, friends, good advice as always from Wayne. Listen, go to Wayne's website, todaysretirees.com, todaysretirees.com, where you can pick up the phone and come in and sit down with Wayne at any of his offices. He'll set you up an appointment and you can discuss all of these kinds of things at 866-626-3990, 866-626-3990. We'll see you the next time.
A certified financial planner is a true professional, a well-rounded, holistic planner that helps you in all areas of your financial life. Estate planning, tax planning, financial planning, insurance planning. We have to sit for a 10-hour, 2-day exam, at least back when I took the test. It's not just a weekend designation where you go somewhere for a couple days, pay a couple $100, and now you have letters behind your name. One thing I think is important is that you try and find an independent certified financial planner. Somebody that doesn't work for a big firm. I myself own my company, Great Lakes Benefits and Wealth Management. The buck stops with me, an independent certified financial planner, one of the only ones on the north coast of Ohio.
Thanks for tuning in to today's Retirees with certified financial planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Visit todaysretirees.com or call 866-626-3990 to schedule a no-cost appointment with Wayne. Today's Retirees is brought to you by Great Lakes Benefits and Wealth Management, family-focused retirement and tax planning services, anchored in family values. Information and opinions discussed on today's Retirees do not necessarily reflect the opinions of this station. Opinions expressed should not be substituted for individualized consultation with a qualified financial advisor. For specific information, call 866-626-3990 or visit todaysretirees.com.